Hello everyone, welcome back to the stock market learning channel Basu and intraday guide. So I'm back with a new video, but as usual before going ahead, let's go through the disclaimer. So all the content provided in this video is solely for general interest and educational purpose only. All viewers should seek the expert opinion before acting on anything shown in this material. All the information provided here is only my personal view and I'm not responsible for any miscommunication or any misinformation or any problems aroused by this video. Okay, with that, let's start the video. So recently, many people started asking me uh, one question, one very common question, like, so we are doing intraday trades, and what is the best percentage of uh, profit we can expect from intraday, and what is the best um, percentage mark wherein I can just book my profit. So this is a very regular question which everyone is asking. So I just thought of making a quick educational video on this. So we'll just go through that, and here you can see the answer to that is this. The topics will be like regular profit, and the second one is compounding and exponential growth. So with that, when I say regular profit, so let me show you with an example what exactly is regular profit. Regular profit meaning every day there is a kind of fixed profit which I can pocket in. So that is a regular profit, and the second one is compounding and exponential growth. So I'll just uh, I'll just brief you about that. Uh, so here you can see for time being I will hide this. Okay, so regular profit. What is regular profit? So assume that you have 10,000 rupees in your hand which you want to invest in market, and assume that you are an intraday trader. So you are all the time you are doing intraday trading itself. So these two are the like a two parameters which you already have, like a 10,000 rupees and uh, 10,000 rupees you'll be starting with, and you are an intraday trader. So what this regular income meaning is, if you are going for 1% daily. So let me write it here. So if you are getting a profit of 1% daily on your initial amount of 10,000, so daily if you are getting this like a 1%, so whatever the profit you are getting every day is your regular income. Okay, for 10,000 it will be like 100 rupees. But the second thing you can see this is compounding and exponential growth. So what exactly is this? So as you can see this, on the day one you were having 10,000 rupees in your account, and as I mentioned earlier, by with that 1% you made a profit of 100 rupees. Then at the second day beginning you will be having 10,100. By the way, here I am just excluding your brokerage and whatever the taxes are there, as they are minimal, and you can just at the end of the day you can just remove those or deduct those from the final values, whatever with whatever. But I'm just going with a rough figure here. So on the day two you will be having 10,100 rupees, and if again on this value if you are making a 1%, then it will be 101 rupees. Okay, so now similarly I'll be having this, so if I regularly keep on getting 1% on my initial investment of 10,000, at the end of the 14th day I'll be having 10,495 in my account, which is like a 1495 profit from the first 14 days. Okay, so similarly it goes on, so it is like a regular 1% on a daily basis. So what happens if you have if you have 10,000 in your account, and if you are aiming for 1% every day, okay, and you don't withdraw any of the money from your account, and you just keep on compounding that. So with this, by the end of 50th day you will be having 16,283, meaning in 50 days you will make a profit of 6,200 rupees from 10,000. Okay, so similarly, after 100 days, let's see, after 100 days you will be getting a overall you will be having a overall amount of 26,780 in your account, which means that 16,780 will be your profit. Okay, so similarly I go and I'm not removing anything, I'm just compounding my initial investment of 10,000 rupees with 1% every day. And so if you can see this, so in a year there are 365 days, and if you consider like a 120 125 days as a holidays, so you'll be having around 240 you will be having around 240 days, 240 working hours days for market in a year. So with this, so if you see this at the end of 1 year, so you will be having 1,08,926 rupees in your account, meaning you are almost uh, you are multiplying your initial investment by 10 times, by 10 times. So initially you had 10,000 and now it is like almost 1,10,000, so you have almost got 1 lakh profit out of it. So now the question is, when you say yeah, this is like theoretically this is true, but as I generally say, no one is 100% right, and every day you might not get the 1% profit. In between you will be having losses also. So as I say, you should always trade only if you are confident of like a of having a risk reward ratio of at least more than one. More than one is like a 50% and more. If there are chances of winning, then it is called as risk reward ratio more than one. So here, so as I mentioned, like 60 times, so if you are failing 40 times and if you are winning 60 times, so even then you will be making an your overall amount will be like around 60,000 at the end of the year, even though if you are losing 40% of the times. Okay, so this is the power of compounding. So you started with 10,000 and daily you got 1 percentage up on your initial investment, and at the end of the day, at the end of the year, so you'll be having this much profit. And out of this, so when we talk practically, so you were right only 60% of the times, and another 40% you were wrong. So even if you are say like from 1,08,000, even if I say if I leave some 45%, so it will be like even though you are right only 55%, then it will be around 60,000 rupees. So from 10,000 you can make a 50,000 profit at the end of 1 year. Okay, so this is about basic how exactly compounding works. So now with this, I'll just give a brief like the real magic of compounding. Okay, so now assume that so here as you saw, we took the percentage growth of 1% every day, but assume that you you aim for 2% a day, and what will be the figure at the end of 1 year? So you might be thinking that that will be 1,08,000 into 2, which is like 2,16,000. Am I right? I think you are doing that, but let me show you with a example what happens there. So see the magic number there. So if you see that, if you are from 1%, if you are shifting to 2% every day, then at the end of 1 year you will be having 11,58,000 in your account with 10,000 investment. So are you seeing the power of compound? This is the value of compounding. So in this case, even if you are losing again like a whatever that 40 or 45 times, but still you will be having around 6 lakhs in your account. Okay, so even after losing 40% of the times, out of 10 times, out of 10 shares, even if you are losing like a uh, 4 times, but then still you are making 6 lakhs. Okay, so this is the power of compounding. So this is all theoretical, but in order to get this, you should be very, very, very dedicated, and more than that, you should be very disciplined. Very disciplined meaning, so you are saying that every day you are going with 1% or 2%, whatever the number is. So you are targeting 1%, 2%. So assume that you have started a trade on this day and with a profit of 1%. So now if the share starts going against you, there is chance of loss in that case. So what you have to do is, your risk reward ratio will come into picture here. So you should be always ready to come out of the trade with whatever the minimal loss, which is less than 1%. Okay, you should not, in this scenario, whatever the case is, you should not lose anything more than 1%. So um, keep a stop loss in such a way that you will automatically exit out in less than 1%, with less than 1% loss. Yeah, even if it is, if you are closing that on a losing side, that is fine. You still have the market open forever. So if not today, you can make, or so you can compensate for that money tomorrow. But never ever just keep be in that, and when the share is going against you, don't be in that trade. So just try to come out. Okay, so with that discipline, I'm sure that making this as a habit, or making this as a routine is not at all a difficult job. It is a very, very easy job once you are totally adhered to the to that discipline. Okay, so hardly like, it may need like a 20 strict days for you to adhere to this rule. But once you are into this, then probably you will only see what exactly this is, what exactly I'm trying to say here. So really, there is nothing important than compounding in the share market, or in our lives also. So it's not only in the market, it's about saving the money also. So whatever the pocket money you are having, or whatever the savings you have, so just keep a habit of compounding the savings. Meaning, if you are if you have like a 1,000 rupees saved this month, so you just try to save 1,200 for the next month, and 1,300 for the next month, and similarly goes on. So by the end of this one, right, so if you keep on doing that, you will see a awesome result. So believe me guys, at the when you look back after following this for years, and when you look back what you have saved, then really, I'll tell you, this the amount what you will be saved will be a very lump sum amount. Okay, so with that, I kind of I assume that you guys got what I'm trying to say here. Okay, so if not, uh, just give me I mean, drop me a message, so if you have any doubts, so that I will clear that out. So now, with this, probably you might be having a question, if you have seen my earlier video, so wherein I asked you to book the profit. But here I am not asking you to book a profit, and I'm asking you to go and continue with the amount what you have. So you can see the difference. So I just want to make you guys clarify the difference between the two. So in the earlier video, when I asked you to take the profit in a weekly basis or a daily basis, uh, there is a huge difference between that scenario and this scenario. There you saw my trading session, wherein it started from 50,000 rupees, and it I was able to make 2,10,000 rupees at the end of 1 week. But the main difference between there and here is, here you are having no kind of there are very, very less, or even 0.00001% less of your uh, your amount or your invested amount going washing away. But there I was with 50,000 rupees. I was taking a heavy risk because I was totally into pure intraday, and I was taking a leverage of around 20 to 25 times, which is like a, even a share moves 2% there, my investment would have washed half of the time. So for example, in this case itself you can take, so if it is like I started with 10,000 with all the leverage what the brokerage will be giving to me. So with that, if I've invested in buying of a share and assume that it went like a 2% down from my buying value, then half of my investment will be washed away. So meaning there I was taking a huge risk. So if I'm continuing to take that huge risk with that leverage and all, in that case you should preserve your capital. But here, as you are not taking any of the leverage, so you are just playing with your initial amount. So you can see this 10,000, you are playing with only 10,000 and making a profit out of it for 1%, which is like a not a big deal in a regular market, because every day the shares will be moving at least 2 to 3% every share. So in between, if you can catch 1% for a share, which is like a really very very easy. And probably you might have many of you might have already seen my trading style, wherein I can easily catch like a 2 to 3% very very easily. So with that kind of uh, with that experience or with that discipline, so if you can do this, then probably there is very less chances of you losing the money, and making and hence there is a uh, what I say is heavy chances of you making the money by this method. That is what a one line sentence. So the importance of compounding is very very necessarily needed, that too in this in today's world, wherein everything is the cost of everything is going so much high day by day. So probably it is currently you may feel it bit difficult, but if you just try to understand this by seeing once or twice, or even by implementing in your life what is this compounding, so probably then you will understand what exactly is the importance of this theory. Okay, so with that I will wind up this session. So please let me know if you have any questions, or um, just message me in the comment box below, or you can even contact me on the cell number given on the YouTube channel. Okay, with that, I'm just ending this session. So please make sure that you like the video and share it with the people who really wants to take the advantage of uh, this video, wherein this is a very very important topic, which is like a kind of very less highlighted topic. Okay, so yeah, with that, signing off. Thank you. Bye bye.